It's Friday, May 31st of 2024. We did quite a few trades in our two accounts today. First up top above the blue line, you see our small account. I'll start with the second one here, our Tyson cover call. So overnight, that was a sign. So that stock was called away from us. We sold 100 shares of Tyson at 52.5, and we definitely would have preferred it be sold to 57.5 that we ended up buying it at months back last year. We have collected a nice premium in it, and I was thinking about going back into a covered call at that $57.5 strike price. We had gone out to December or so to be able to get any kind of decent credit when you figured the assignment and everything. But just thought about it as I was looking through potential trades, and I decided, you know what, this EVRG stock actually looks better. Its earnings are a whole lot more consistent, and I can just sell the same strike price, the 57.5, because the stock prices were fairly close. So that's what I did. I took the capital that I would have rolled back into Tyson. I'm still okay with Tyson, but they're having some challenges, which I believe they'll work through. It's a solid company. I decided to go with the less risky option for about the same situation. So I bought the 100 shares of EVRG and sold the December 20th $57.5 cover call, and it cost us $52.35 per share. So if EVRG does go up and is called away from us anytime before December, we'll end up with about the same situation as if I'd rolled Tyson out to the same strike price and it had been called away. EVRG, their dividends are higher, and it's not about to go to ex-dividend, but we should have received several dividends if we're still in this through December. So overall, we'll take a look at the chart. So Tyson doesn't look bad. Its technicals don't look bad. It's, the hourly chart doesn't look good. It's trading below the green 50 red 200 moving average on that hourly chart. But here on the daily chart, we do see it's approaching an area that should serve as support for us. Right at the lower part of this candle from May 6th is also approaching the red 200 moving average. Big volume today. We see buyers try to buy it up. Sellers sold it back down, so that's not necessarily positive. But it wasn't an overall very strong down candle. It wasn't a very big down candle. So it was kind of in control, but it is still declining. So just kind of want to keep that in mind if you're still in it. And again, like I mentioned in a comment to one of y'all, if this hadn't been called away, I would have just left this position. But since it was called away, I figured let's just kind of see what our options are. But if it hadn't been called away, I would just stick with it and continue trying to roll it up and out to the point where we can exit at 57.5 if possible. Now our weekly chart looks a little bit better. Then of course the hourly one here, we see it broke above the green 50 moving average, and now it's coming down to test support there. So we'll have to see if that holds. Notice over the past month and a half, nice buying pressure, but the past month, we see that the sellers have definitely been in control. Although that candlestick there, sellers sold it down, buyers bought it up, but since then it's kind of drifted back down. So it's at an area that's going to be interesting. It should serve as support for it right here on this green 50 moving average, the red 200 moving average. If it doesn't, then we'll have to see what happens to it. But right now, in the weekly chart, it's now in an uptrend. So we see higher lows here and higher highs, so still comfortable with it. But since it was called away from us, before I went right back in, I was like, let me just look at some other alternatives. And EVRG is one that I've been looking to trade in, and actually looking to trade it back in here. But I wanted to see it find support, which it did. And now it had a bounce yesterday and confirmed that bounce today with nice high volume. So that looks good. I like that on this daily chart. Expected to come down to test this lower part of this upward sloping trading channel that's been in. You see a little better here on the bottom right, the weekly chart. And it's still very well made, and that would be down here on that $51.5 area, 50. So still may come down to test that, but appears for now to have bounced off this area here around this red 200 and green 50 moving average, as well as this area back in here that served as resistance for it. So that general area, we do see nice high volume today. So happy to swap it out, but either one I'd be fine with. But if I had my pick, I'd pick EVRG because this earnings are a lot more consistent. It's fairly valued right now. It's not undervalued, but it's fairly valued. Whereas Tyson still working through its future value because it's had a overall earnings decline. Now moving on to our main account here, we did several trades today in that main account. So starting up top, we sold the DGX July 19th 135 put, got $1.80 per share for that. All right, so looking at our charts here, first of all, our hourly chart on the top right looks good. Bounced off the red 200 moving average, and now appears to be making higher highs and higher lows in this hourly time frame, so that looks good. Bottom left chart, our daily chart, although we see a gap back here, which gaps tend to get filled, I think it's 93% of the time, but we do see what happened, kind of similar to EVRG, how it had a nice advance, made a higher high here about a week and a half, 2 weeks ago, Now it came back down, formed a new higher low here, so we have higher highs, we have higher lows. That looks good. Nice high volume today, real similar to EVRG. So overall, like that. Then going over here to our weekly chart, the one little negative is that where it found resistance over the past several weeks is around an area right in here where it found resistance back in January, early to mid-January. More specifically, it's the area that served as resistance for it back here in July of last year, so almost a year ago, not quite, about 11 months ago. But overall, looking good. See nice buying pressure over the past month and a half. See it kind of found support around the red tuna moving average on this weekly chart. It had a higher low here, had a higher high here. So overall, looking good. I'll look to add this if it comes back down. We did sell a little closer to at the money than what I have been doing recently because the 131 just didn't give us much premium at all. So we did take a little more risk by doing that, but it is below the green 50 moving average on this daily chart and just above the red tuna moving average on this daily chart as well. Then notice over here it's that 135 is just above the green 50 moving average on this weekly chart. All right, I'm moving on to AVB. So we sold the July 19th 180 AVB cash here put and got $1.60 per share for that. While I'm pulling this chart up, just a reminder that I know these initial returns are not great when you figure return on capital or compare the strike price and the days we could possibly be in this. But our goal is to close these out early. And if we can do that, then we can greatly improve our returns. We can turn a 5, 7, 8% return on capital to a 20% return on capital. And since we're selling so far out of the money, the risk is lower. And if the stock bounces, we can close them out early. So just kind of keep that in mind as we're reviewing these. Now with AVB, one negative here in the top right chart, the hourly chart, we see it's below the green 50 and red tuna moving average, and it found resistance there. So that is a negative, but not a big negative. What I like here is what I saw in the daily and the weekly charts. First of all, the bottom left daily, see that again, it too had a nice advance, made a higher high, came down, and depending on if you count this as the low, which very well could be argued as a low, it found support right at that low. Had a gap down, it's now filled the gap, but it found support above this red tuna moving average, and we sold the strike price even below that, the 180. Notice again, nice high volume today, almost twice its average, and nice up candle as it filled that gap. Down here on the bottom right chart, the weekly chart, we see it's a nice overall uptrend. Higher low there, another higher low there. Now it's trying to form another higher low here, so we'll see if it does it. Now in here with our highs, we see a high here. This high here wasn't quite as high as the one behind it, but this one over the past couple weeks was. So overall looks good. The past month and a half, nice buying pressure. And as it's been declining, volume hasn't been exceptionally high. This week was right on average, but notice what happened is that sellers sold it down, buyers bought it back up. So we like that. And just to be safe, we sold it down here $12.68 below where it closed. That's where our 180 cash secured put option strike price is. The next one is ADM. So we had a little more room to add to this for our initial position size. This is one that we had sold some cash secured put options in. They were assigned to us a while back, so we're in a covered call, and we also had sold some additional cash secured put options. And so we had room for one more, and that's what I did here. I finished that initial position size by selling the ADM July 19th 57.5 puts and got 71 cents per share for that. All right, so here we have our charts. In the bottom left, we have our daily chart. And what I want you to notice here, unlike some of the other ones we've been talking through, it's just kind of trading in a zone. It's in a zone here with a high of around 64, 65, and a low down here around that $57.5 area. Trading in that zone, nice buying pressure the past few days. We see sellers sold it down yesterday. And it was a doji, so buyers and sellers were fairly equal by the end of the day. Volume was high, so apparently buyers supported it, but sellers had enough strength to push it back down. But today, buyers kind of took control, and notice what happened. It closed almost on the high of the day. And you can see if I go to the minute chart here, this is the top left chart is our 1 minute chart, and notice that all day long it just pretty much went almost straight up. So buyers were very excited about it today and yesterday, so that looks good. I like this trading in that zone. It is a company that I believe is undervalued, although the earnings are being challenged the next month, year or two. So just kind of keep that in mind. They're stable. They appear to be stable for now based on earnings projections. But now we're at a full initial position size, so we will not look to add to this unless we need to repair it. All right, and then when I spoke about EVRG earlier with that cover cost, that those same principles apply to this $52.5 put option we sold in our main account. We sold 2 of them. So as compared to selling the $57.5 cover call, which was to replace this Tyson position, we sold the $52.5 put options and got 60 cents per share for it. And I'll just kind of address that strike price here for just a minute. So as compared to the $57.5 covered call, which would be way up here. Let's see, get my charts cooperate here, way up here. The $52.5 put option gives us some room to be wrong and still win. So it's right at the area that just started to support for with a nice bounce today. I felt comfortable doing that. Just kind of keep in mind though that it is running up against this red 200 moving average right up here about our $57.5 strike price on that covered call. So expect it to find resistance there if or when it gets there. Then MET, we sold one of the MET July 19th, $67.5 put options and got 66 cents per share. A little bit lower return than even I like these initial ones, but I saw an opportunity here where it appears to be bouncing like several of our other positions that are fairly valued. This is another one that's fairly valued. It's not undervalued in my opinion, but it is fairly valued. But we see a nice bounce. Came down, found support at the lower part of this upward sloping trading channel. Found support there, nice bounce, nice volume. And then notice that buyers bottled up, but sellers were able to push it back down almost halfway into the candle. So not quite halfway, but sellers did show some strength today. Don't like up top how it's below these moving averages on this hourly chart. Don't like that. But I do like on the bottom this nice upward sloping trading channel has been in going back to June of last year. So it looks good. Forming nice higher lows each wave. That looks good. Higher highs each wave. That looks good. If this is the low again, then we will continue this upward sloping trading channel. So we'll look to add this, especially if it comes back down in here and it's looking like it might find support. Then finally, our two SPX trades. So these are ratio trades that I started doing in this account to share with y'all several months back. And we're just closed one out. We got over $20 per share, or $20. So $2,000 for this when we enter this July position, and we just closed that out and did a real similar trade, but farther out in time in September. So with this, we had pocketed over, I believe it was over 85% of the potential profit. So might as well close that out and go into a new one here. So that's what we did. So just be careful with these SPX trades. They're huge trades. You see the strike prices times 100. You can say shares, even though I know SPX isn't necessarily shares, since it's not actually the shares wouldn't be assigned to you. It's cash settled. But just kind of keep that in mind. Very big trade. If you want to do this, if you like the trade and want to do something similar, you can do it on SPY. It's 1/10 or XSP or something like that. Okay, so just rolled that position out, and strike prices, we adjust them a little bit based on the market going up. So now let's kind of just peek at the overall market for just a minute here. I want to talk through what's going on. So overall, we see that we had a nice advance for the past several days, but then towards the end of the day, see a very strong advance here. SP 500 was trading for around 52.32, and over the past 30, see, that was approximately the last 20 minutes of the day, had a really strong advance of almost 1%. So overall, had been trading, it traded down till about 12:30, then it started to march up, and over the next several hours went up about 0.75%. Then the last part of the day just really took off. So interesting how the week ended up and the month ended up. Hourly chart, not looking too great. We see it's making lower lows here, but did crash through this area of resistance right in here, around 52.64. And so we do have a new higher high now on this hourly chart. And then on the daily chart, of course, we're still in an uptrend. We see it's making nice higher lows and higher highs. And on the weekly chart, definitely still in a very strong uptrend. We could actually move this channel down to there. So overall, still in a very strong uptrend. It is my personal belief that the SP 500 is still overvalued by, I'll have to look kind of this weekend, spend some time on it, but last time I checked was 20% plus, potentially overvalued based on what the market normally trades over the past 20 years or so. Just gotta keep that in mind. We've seen a huge advance here, and at some point we most likely will see a correction, and we just want to kind of be mindful of that as we're doing these trades. So that's all for today and for the month of May. I hope you have a great weekend.